the 1st of February and the 15th of March. Assuming all of that, I think what you do in this scenario is you'd rehire the employee in question, or the number of employees in question, and then you would go and operate the temporary subsidy scheme using the average net pay of a full week calculated in terms of the scheme, which I think Aidan might talk about shortly. But the using the first 9 insurable weeks to calculate the average net pay. So basically, I think the short answer, you rehire and you pay the 70% or the 70% plus top up based on the average net.
Okay, thanks, Ger.
Unless either of the lads they're in agreement with that.
Yeah, guys, have you anything to add to that one?
Very well answered, Ger.
No, that is the answer. Yeah, absolutely. Yeah.
Great. Okay. Well, we might move to question 2. So, and David, we'll come to you on this one. So, for an employer earning over €76,000, is there any support?
There are 3 bands of support. It was headlined as employees on 0 to 38,000 gross, 38,000 to 76,000 gross, and then above that. So above what they're presenting as the 76,000 gross, there is no support. So effectively, there is no subsidy or no encouragement to the employer to hold on to those employees. The workings of the scheme refer to the net wage. And so one doesn't look at the employee's gross wages, they look at their net wage. And the limits for the net wage are 0 to 586, in which case they get the maximum support of 70%, up to 410. And then from 586 to 960, and then they get the reduced support. But above, if your employee was paid more than 960 net in any one week, then there is no support to the employer for retaining that employee.
Okay, and guys, anything to add there?
No,
yeah. Yeah, we're good.
Yeah, that covers the 76,000 point. Yeah.
Okay, Aidan, I might come to you if you don't mind for the next one. Now, I know I have sent this to you because it involves figures. You might just talk, it's about the income support scheme and commission. So you might just outline the question in normal non-accounting speak for us and give us the answer there.
Okay, well, we'll try to do it as best we can in terms of it. So the example that's been asked is, what about the employee under 38,000 and income under 76,000? Now, as David pointed out, the way this scheme actually came about, a lot of the information came into the public domain in some order through ministerial speeches, but ahead of the actual legislation, which has now been passed since last Thursday night. And the legislation is actually based on net wage, not on gross wage. And the bands, as David pointed out, are very much from 0 to €586 net per week, from 586 up to 960 and above 960. So above 960 net per week, there is no subsidy. From 586 to 960, it's a €350 subsidy that's available. And under 586, it's basically 70% of that net pay, given that the maximum figure. So there are employees who are going to be in a box where they're going to be on, for example, 600. They're slightly above 586. On 586 at 70%, they would have gotten a 410 subsidy. At 600, they only get a 350 subsidy. And that's one of the unfortunate natures of the way this thing works. How you actually calculate it, we don't really have enough information in the question to work it out. The revenue guidance that's on the website talks about calculating the average net pay over the January and February period. So obviously revenue will accept that if that's what somebody has done as a reasonable practice. And they talk about adding those 2 months if it was, for example, monthly pay, and dividing it by 9. Now, within that calculation, you have to take it back a little bit, because the actual legislation as drafted doesn't talk about January and February. It talks about normal net pay. So in each individual case, you will have, and this is what's causing a lot of confusion out there, somebody will have to go back. So in the question asked, for example, you could have somebody earning 38,000 or somebody earning 76,000, but their net pay may be lower than the 960s or the 586. So you actually need to do the calculation per employee. There is no easy way around this other than to do that calculation. And there is a bit of an open door not to use the revenue guidance and to actually work on what you believe to be normal net pay. That brings into account the element of the commission, because obviously if a person's commission is part of their normal net pay, and if you choose to use the revenue guidance, which says use January and February, then there is no reason why the commission can't be taken into account in working out the total amount of the subsidy to be claimed. Okay, does that make sense?
Yeah.
Okay, so the third part of that question, because it was quite a long question, was what is the employer's element? Under the subsidy scheme, as it is now drafted, the employer's element is what the employer chooses. Some employers may be able to put in a top up, as it's been called in the media, some may not. The key to any employer element is to make sure it doesn't exceed the actual normal net pay, because if it does, the revenue in their latest guidance have said, and the legislation really supports them doing this, that they can reduce the subsidy by the amount of the excess over and above the normal net pay. Is that clear? Or is that too much information in one spiel?
Well, look, I suppose at this point we're looking for all the information that we can get. So let's take it. And, you know, I mean, obviously to anybody out there that is still struggling, if anybody wants to email me in, then I can go directly to the guys and we can get clarity on it via email, if that works. We have a couple of questions coming in. I might just jump to them before we go back to the other questions, if that's all right. One question I suppose we all want to know, which has come in, is how long is this going to last? How long is the COVID payment going to last? Do we have any indication on that yet?
It's provided for 12 weeks.
The 12 weeks and reviewed after that?
The door is open for the government to review it after that, but as it stands, they've brought it in for 12 weeks.
Perfect. Okay, David, I might go to you on the next one if that's all right. The majority of our work changes every month. If I apply for the scheme based on my estimate that our revenue will be down at least 25%, but then it doesn't materialize based on unexpected work coming in, what do I do?
The revenue have said that you, as long as you document your estimates, that is sufficient for the purpose of whether you qualify for the scheme. So this is a good faith scheme. It is well intentioned. Some people will gain and some people will not. So what I would recommend to people is that they document the criteria on which they base their decision, document why the turnover was going to go down by 25%. And there's many reasons why it can't, why it may or may not. It could be seasonal variation. It could be a startup scenario. And if it turns out that they were incorrect in their assumptions, I think what's important is that they would document it.
Okay, thank you. And Ger, if we could go to you on this one. What is the definition of ceased trading for the self-employed service provider? If the self-employed person's office is closed and no new business coming in, but the person continues to complete existing contracts, would that meet the definition?
Yeah, the ceased trading for the pandemic unemployment payment. So that's what we're referring to here. So for self-employed people, they cannot claim through the subsidy scheme because they're not obviously an employee. So they would claim, their only option to claim is through the pandemic unemployment payment, which is the straight $350 per week. And the guidance for that is that they need to have been ceased trading. But that's not the same definition as ceased for taxes or ceased in the eyes of revenue. So in the scenario, I think it has to be on a case-by-case basis. But in those type of circumstances, where there's no further income coming in and you're just completing out existing work, so it could be administrative work or clearing out contracts, then I would think, again, in the good faith of everything, revenue or the DESP would accept that as an application. But again, I think David's point, the documentation process around that, I think, is important as to why you would believe that you've ceased to trade.
Okay, and David, we might go to you on that as well.
Yeah, well, just if you want to add on to that, if somebody has concern the most important part of this is that people have been upfront with all the facts they've presented. So if they're putting in a claim for the unemployment benefit, they should clearly state on that, this is my circumstances in that I've stopped trading, but I'm doing some wind down work. So people can protect themselves by making all the facts clear. And if there's any doubt afterwards, they can say, well, look, I told you.
Hmm.
Okay. Okay, we'll go to the next one. Aidan, you might come in here. The Q&A from the Revenue titled Guidance on Operation of Temporary COVID Wage Subsidy Scheme is very good. Oh, sorry, this is a point actually. This includes calculations of net pay and the subsidy and is worth reading. Somebody just came in there. And Aidan, sorry, is the current emergency pandemic payment from social welfare of €350 for a duration of 6 weeks or for the 12 weeks? 12
weeks. It was extended in the revised scheme as they brought out last week. Okay. The original scheme that was talked about was a 203 scheme, and that was for 6 weeks. When they brought in the new scheme, the COVID subsidy scheme, they extended it on for 12 weeks.
Okay, thank you. Just back to one of the questions we had earlier, just in terms of documentation, what is expected here?
Are you addressing that to me? Sorry.
The documentation. David, I think it was your one, was it?
Well, what the revenue said is you do not need to engage an outside professional. So in terms of if somebody is documenting why they think the turnover is going to drop by 25%, look, in some cases it's simple. If it's a restaurant, if it's a supplier to a restaurant, it's clearly evident that their turnover has gone to zero. But in certain circumstances where somebody doesn't know what their sales are going to be for quarter two, which would appear to be the basis period, they document why they think. So, for example, is it efficiencies in work? If they're not going to invoice it, if customers are going to stop ordering. So as long as they document it, any circumstances in which they've formed their opinion why their turnover is going to drop by 25%. The bottom line is nobody knows how their turnover certain is going to be affected unless they're closed.
Okay.
And just to add to that as well, Linda, there's a proof of eligibility document that Revenue issued last Thursday night. It's only a 3-pager. It's on their website, and they should, any business owner, any employer, I think, should read that, and it would put their mind at ease around some of the eligibility concerns they might have.
Okay, well, we might get that out, Gerald. We might email that out to everybody if that's all right. Ger, you might send it on to Gerald and we can issue it out so that it will give people clarity and it'll be in their inbox. Aidan, I might come to you on this one. Does an S-class director qualify for the temporary wage subsidy?
Black and white, yes. Simple as that. Once they're on the payroll, the condition is they must be on the payroll on the 29th of February, and a submission must have been made for them through the payroll system by the 15th of March. Once they meet that criteria, their normal pay they can claim a subsidy on it. It's quite straightforward.
Perfect, because we actually had a second question on that as well, which I'm assuming is the same answer. Are company directors who receive salary through payroll, PAYE and PRSI paid eligible to receive wage subsidy through the wage subsidy scheme? So same question, I guess.
Yeah, it's the same question. Again, obviously for a lot of directors, they'll get disqualified possibly because of the 960 limits. That will probably be the bigger issue for a lot of people. Their wages will just be too high, so there won't be a subsidy for them. But anybody who meets the criteria, if they're Class S, Class A, there's no distinction made between the actual PRSI class that somebody is in. There's actually quite a lot of misinformation on this in the media, and it has caused a lot of confusion. But if you go back again, I was talking earlier about the legislation. The legislation only talks about emoluments, and emoluments are basically monies put through payrolls by employers. So a director is employed as much as any ordinary employee. So they just must meet the condition of the 29th of February having been on the payroll and a submission having been made by the 15th of March. Then it's a question of calculating normal pay and working out where they fit within the 0 to 586. The 586 to 960 are not in at all. Yeah.
Okay.
There is one other consideration people might wish to add to that. If, for example, as Aidan said, many directors will breach the income threshold, and on that basis they would not qualify. They also have to look at the other criteria within the scheme. There's one point to be made that The names of the people who participated in this scheme is going to be listed on the revenue website. So if you have a scenario whereby 2 directors work for a company, it's only themselves working, and they're in a position whereby they were able to claim from the social welfare benefit, and they didn't wish their name to be published on the revenue website, they may choose to take the easy option and claim directly from albeit they do qualify, they may choose to keep an anonymity and claim from the Department of Social Welfare directly.
Okay, yeah, I got that. Okay, David, sorry, you might just answer this one for me as well then. Can a married employee change his tax credit to be assessed as individuals rather than all tax credits to one employee, so as to have net pay be reduced to fall under the max limit?
The net pay is based on the first 8 or 9 weeks for the period of January and February. So as Aidan said earlier on, the basis period for the calculation of net pay is essentially the first 2 months of this year. So changing tax credits now or for the future is not going to have any effect on the basis whether someone would or could qualify for it. Is that fair to say, guys?
Yeah, that's it.
Okay, so we have another question here, Ger. We might go to you on this because it's similar to, I have 2 questions that are quite similar. One is, we estimate our turnover will be down by at least 25%, but we have some cash reserves, overdrafts for salaries. Can we still apply? And then David, if I could put the second one to you, just to get both of your opinions because they're quite similar. If a company has cash reserves, they run the risk of applying for the Temporary Wage Subsidy Scheme?
Yeah, so I think this was addressed by Revenue again in their updated guidance note, whereby companies with cash reserves are eligible to participate in the scheme. They did put in a caveat on it that they would expect such employers to pay as much of the salaries as possible of the employee in terms of the top up. So in the scenario whereby you've got significant cash reserves, the government would expect you to pay, if you can, as much of the top up as possible to bring the employee back up to their original net pay. But that doesn't preclude you from the subsidy scheme itself, because again there was a lot of commentary around the cash reserves and the unable to pay piece that was in the legislation, and concerns about businesses that were technically on the face of it able to pay, and did having cash reserves exclude them. And Revenue addressed that point last Thursday night in their updated guidance.
Okay, and David, sorry, just on the one then, I assume the same answer. Cash reserves, are they running the risk of applying for the subsidy?
Well, they're not running the risk of applying. The question is on review. Would they have qualified? So worst case scenario for somebody is they participate in the scheme, they draw down the subsidy from the government, they pay it in good faith to the employee, they continue on the employment in good faith, and on subsequent review somebody says, well, you didn't qualify. So again, what they have to do is document why they think they've qualified. As Ger already alluded to, there is an expectation that where you have cash reserves and where you have the ability to pay the top up, then one should pay it, and that will form part of the judgment. It doesn't say you have to pay the full top up, it says a significant proportion. And the other part, to the last question, just to add on, I think the question was raised, are they expected to incur usage of their overdraft or borrow? That's a separate issue than the cash reserves. So on a general basis, they can if they choose. But on a general basis, I think every business owner has to look where they're going to be in 3 months after this. The fittest will survive at the end of this. So people incurring debt are enduring debt for when we go after COVID. I think they'll be put into disadvantage. So what businesses should be trying to do is, in terms of, it's not going to affect their qualification for their scheme, but it may affect their ability to function afterwards. I'm not recommending for businesses to take on sufficient debt to pay the top up. But really where people have to visualize themselves is, how are they going to survive? There will be enough challenges after this without servicing debt that you incurred throughout this period.
And on that point, that the state want to keep people in employment, so the employer has a responsibility as a business owner to plan for the future. And it's not just a matter of protecting the jobs for 12 weeks, it's protecting the jobs and the business into the future. So you've got to look at the longer term plan for the business.
Just on that, and I might go to all three of you on this, like what advice would you give to businesses now that are looking beyond the 12 weeks? I mean, I suppose we went through a week of panic. We're now kind of in a week of reality, and we're looking at weeks of this situation. But as you say, Ger, people have to look beyond COVID-19. What should they be doing right now?
Well, I think there's, you know, and I agree with you that the initial phase was definitely panic. And then I think to get yourself out of the panic, there's some look to the future that this isn't forever and that there will be some positivity, hopefully, in the future. And then you come back into the reality of getting through the next 12 weeks, but using those 12 weeks, or it could be 16 weeks or 6 months, whatever it is, to actually make your business more relevant to your customer, better than your competitors in the future when you come out of this. So there's an opportunity for every business here as well to use this time. And you know, these types of supports that we're talking about here are going to help businesses do that. So, you know, even in terms of the employer subsidy scheme and the choice between laying somebody off and keeping them on because there isn't any work, I think the business owner has to ask themselves, is there work that person can do that maybe isn't the normal client-facing work, but can they add to making this a better business in the future, and using this opportunity to grow the business, and so that when they come back out of it, they're a stronger business. And that's difficult when you're in the despair and the depths of stress and trying to, you know, looking at your bank account and just trying to keep the business ticking over. But initially, if you have that plan for a 12-week period, that you can survive that period, then you've got to be looking forward beyond that.
Okay, guys, Aidan, anything to add there? Any advice for people?
Yeah, I suppose the one thing we have to remember is, you know, this is not the first time there's been a sharp economic shock. If you take the virus element out of it, in any economy, even in the Irish economy, there's a lot of stuff out there, particularly from the bigger consulting firms, in the nature of what went on during SARS and H1N1. That didn't really hit Europe that much, but there is, if you like, business models that can be taken and learnings that we can take and grow from those. Probably in relatively recent Irish history, the last time we had such a sharp, direct economic shock was probably the currency crisis in 1993, which happened over again about a 12-14 week period and had massive impact, particularly in the agricultural sector at the time. And I actually worked in the agricultural sector at that time, so I was very close to the face of it. And you had basically businesses that were generating maybe 5-7% gross margins overnight because of the currency, generating minus 15% margins and having to pull themselves out of it. Now, at that time, we had the benefit of devaluation. So it there was a correction that allowed businesses to get back in order. But I actually see the current thing as there's a sort of a 6-week model, which we're in at the minute. The first part, exactly as Ger described, is the shock factor. What are we doing here? Within that, you've then got sort of weeks 1, 3, 2, 3, 4, which is where we are now, that businesses are basically pruning themselves back. They're cutting their costs. They're looking at all their bills and they're trying to say, well, how do we tread water here and survive so that we come out somewhere at the end? Towards the end of that sort of 6-week type period, business people really need to get themselves in a mindset to say, well, what have I learned here? Is there anything new I can be doing? You know, is there things that I can be putting my time while I'm stuck at home or whatever into learning? How do I develop my markets, improve my operations, have better performance in my financial processes, something of that nature? That's the 6-week plan, if you want to put it there. But the reality is that most businesses are going to be hugely impacted. Their stock will have been devalued. Their customers won't be in a great position to pay them. You know, the reliefs that have been put out there for the nature of VAT and PAYE, they're not writing off the debt or rates. They're not throwing those debts away. They are going to be there in 12 weeks time when we get to the end of that, and businesses are going to have to find the wherewithal in their profits to pay down that added accumulated debt, which goes back to the reserves question. They're entitled to keep those. Niall Cody was on the radio this morning and very much said, Niall Cody's the chairman of the Revenue Commissioners, and he very much said, look, this is something we are here to support employers, and we want valid businesses to be there at the end of the day. So in the planning phase, if you like, that we're in now and they get to the end, you can do your workings in terms of whether you're eligible for this scheme and what you should be doing on the basis of, I want to be in the same position when I get going again, because you are going to need those reserves to make profits to kill down your debt. That to me should be a sort of a 6-month planning window to try and say, right, how do we make sure we get rid of the VAT bill, get rid of the PAYE bills that we're not paying at the minute, deal with the residue of rates, and then ultimately get back on track for what is your real business plan, where are you going? And I think the key to it, and you know, we did a discussion with the lads earlier on, we're all kind of very much of the belief there are learnings here which are telling us, learn something new, you know. And someone put it to me last week in a very simple fashion, it would be nice to get to the end of August and have 2 new skills that I don't have now, you know. So maybe that's part of what we need to get in that mindset. And
yeah,
on that basis.
Absolutely. And I'll put in a blatant plug for SkillNet at this point, because they're obviously working very hard on online training. So we'd suggest that anybody go and have a look at Waterford Chamber SkillNet on that. David, I'll come to you in a second. We just have a couple of questions, and I'm just conscious of time. And David, you might finish us off then after with your advice. But Ger, if I could go back to you maybe on this one. Actually, sorry, I'll go to Aidan, because this is back on the sales commission. If an employee got sales commission in January and February, that takes his net pay over the limit during those 2 months. If his sales commission is likely to be 0 for the next 6 months and well below limit, is he entitled to any support?
Well, the support is maybe a slightly different thing to the subsidy scheme. You've got to remember there is the option of, you're talking in the subsidy scheme about keeping people in employment. There is the element of going down the social welfare roads and whether somebody would be better off in terms of what they might be earning there. And you could have that scenario, you know, somebody getting the 350 payment on social welfare for 12 weeks. If their normal earnings are 500 or less, they may actually be better off on social welfare. So in terms of the commission, that's really relevant in the calculation of what would be normal pay and how the 70% might be calculated. Whether or not they get a top up on that is very much up to is the decision of the employer. It's not the decision of the employee to determine where they stand. So the only real advantage of the commission is that it is reasonable, if there was commission in January and February, to include that in the calculation of normal pay for the purposes of claiming the subsidy. Does that make sense? But it doesn't really matter in terms of what the person is then getting afterwards, other than the legislation absolutely requires that if the company claims a subsidy of 370 quid for somebody, they must pay that to the employee. Okay.
And Ger, just one last question that's come in here, and we'll go to David then. Will there be an expectation to repay some of the subsidy if turnover is higher than expected once the 12-week period is over?
Yeah, so I think David might have alluded to this earlier. The short answer to that is no, assuming that you were eligible in the first instance. So the key thing there is the documentation at the outset as to why you felt you were eligible and were going to meet that 25% criteria. Revenue have clearly again said in their guidance note that if it transpires that your turnover hasn't decreased by 25% and they query it, they will just want to see your rationale and thought process for claiming it in the first instance. There's also, in relation to the 12-week period, it's a moving period. So if you feel you are no longer eligible throughout that 12-week period, you stop claiming and you stop claiming the subsidy. So it's not a case that you get it for 12 weeks. You get it for as long as you're eligible for it.
Okay, thanks. Guys, anybody got anything to add there? Apologies, I'm trying to plug in my phone before it dies, so I'm moving around.
Well, if I could just reflect a little bit back on the comment in turn, there is a sort of a culture there that maybe people shouldn't be going into this scheme in the context of, you know, maybe I don't qualify or maybe not. I think if people were to look at the article on RTE today of Niall Cody's interview this morning on the radio, he was very much saying that, you know, people who entered the scheme, there are 26,000 companies have already applied to be in the scheme. So, you know, you're only going to be one of God knows how many that are there. He is very much, I think he described it as a mark of honor for an employer to be on the scheme on the basis of they are doing their bit to actually sustain employment in the economy. So there's an element to which people maybe need to get into that more positive culture about how they're actually doing it. He also said that he doesn't expect that revenue will need to review very many of these actual applications. So I think unless there is a blatant abuse, they are not going to be coming back on it.
Mm.
Okay. We might finish things up. I'm conscious we've gone on probably longer than expected. David, you always have wise words, so why don't we leave the last words to you in terms of advice. Just like the lads had outlined their suggestions, what would you recommend to businesses now going forward?
Well, I suppose starting from where we are, each employer has had to make very difficult choices. And very difficult decisions. To take Aidan's point alone, you know, do I opt in for the scheme or not? People were worried about reputations, the declaration you're actually insolvent. I think people have got over that. And by and large, there is, if 26,000 people are in, and there's a lot more to come, I think we're going to see a lot of people on this scheme. Okay, so there wouldn't be any reputational damage if people have any concerns about that. But we are learning a lot about our business. We're learning about what employees do, what way we go about our work. And if we're taking the vision of where our business is going to be in 3 months' time, if we take this time to focus on that, so how do our employees work? What employees do we need? How efficient are employees? Which customers pay us? And you can build a better business after that. We have to look forward to the future where we think there will be a better business. And I think that after this, there are a lot of businesses will be a lot stronger. There'll be a tough 6 months, as Aidan said. But after that, they have the ability now to focus on how they can be stronger at the end of the day.
Thanks, David, and a pleasure, obviously, to do the webinar with you guys. Gerald, if you're still there, if you'd like to close things out, I just want to say thank you to everybody, and we will obviously continue to support you as best you can, so don't be a stranger and keep in touch with us. And I might just hand over, Gerald, if you want to finish this off.
Yeah, well, Linda, thank you very much, and especially David, Ger and Aidan. Thanks very much to all of you for facilitating this webinar and I suppose alleviating a lot of the concerns of the participants. So thank you very much again for that. And just to remind you that the Chamber, we're still fully operational, even though we are trying to get used to our new normal. And we're here to help you in any way that we can. And if you have any suggestions or recommendations on how we can help you, please don't hesitate to get in touch. Thank you very much. Be safe.
Thanks, everyone.
Thank you.
Bye. Good evening. Stay safe.